All right. Good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go take a look at a few things here with you. Let's start off with Halliburton. A lot of emails come in about Halliburton. I know some of you held it. I showed you that a few days ago or the day of the Fed reversal. When we got back, when we got out, when it broke 49, it started to break back above 49.30. I bought back in. We didn't do it for the challenge. Halliburton got a little beat up a little bit yesterday. Popped here today. I did pull my Halliburtons off. Do I think Halliburton goes higher? I do. I do think Halliburton goes higher. Does it go higher here today? Maybe not. But I do think that this comes into the 51, 52 area. But the danger of a pullback here from a technical standpoint is just a little higher. So did pull that off here. Like I mentioned, I want to go take a look at all of our past challenge trades. Not necessarily the challenge trades, but where those stocks are now and kind of thoughts on those going forward. As I've been requested for that, we'll take a look at Apple, and then we'll also go and take a look at Boeing in regards to the option calculator and what we can expect out of that trade. Let's start with Apple. We're not in this for the challenge. We haven't made a challenge trade with Apple yet. Okay, overall. But Apple here is no different than what it's been for the last week and a half. Yeah, you do have a little bit of a bounce here today with the market up. Yesterday it went lower with the market lower. Can you pin a buy over 550? Sure. But this type of a chart, it's still pulling back. It's still in the retracement area. You'll notice that the Bollinger Bands are going to start to contract. And, that kind of leaves Apple in a position of contraction where you're going to be wanting to buy dips and sell some of the rallies. I do think Apple has a rally into year end. Do I think today is enough to say, hey, buy Apple right here? I really don't. I really don't just yet. In fact, you're seeing a lot of relative strength within the Amazons and the Googles and a lot of the other tech over Apple right now. And so I think it's going to take a little bit of some of the market to kind of calm down, maybe even the market to turn a little bit bearish for Apple to ride. I mean, remember, Apple made this big move. The market wasn't going up. But as some of the strength came out for the Amazons and the Googles of the world, money flowed into Apple. And I think we're going to kind of see that. While money's not flowing into Apple, it's riding Google, it's riding Amazon, it's riding some of the more risky, high growth names. When the money starts to come out of Amazon and Google, we'll probably see Apple ready to move. For now, it's just not quite there. Okay, not quite there. All right, let's go take a look at each position kind of from the beginning here from the challenge here. First one we did was MRO. And, we caught the nice wave on MRO, and we caught the drop and sold out as it bounced here. MRO has made its final, or another leg lower here, down to the 34.5 area. This is a very nice bounce point right down around the 200-day moving average. Okay, if I pull that up, you can see the 200-day moving average here. Some big volume started to build down here below 35. Fundamentally, it's in a good position. Even technically, it's in a decent position. Is it something that I'd want to go after aggressively right here to say, hey, it's ready to just go higher? No, simply because I think the risk of a consolidation, something like this here in October, where basically it just whips between 35 and a half and 36, kind of between 35 and 36, and just kind of whips up and down around that area. I think that risk is very high overall. For MRO heading into the end of the year. Still bullish long term on MRO, but short term option trade a little bit tough here. The other is Lennar. Okay, and Lennar we bought puts on back here. The next day stock got upgraded. Stock went higher. We got knocked out. Lennar has continued to go higher. Earnings out of Lennar have been fantastic. In fact, the housing data continues to improve. The home builder earnings are doing well. And they're not only doing well, but they're doing well in a rising interest rate environment. which is extra bullish. And as long as Lennar is able to continue to stay above 36, it's still pretty bullish. You have other home builders like Beazer Homes on major breakouts. Ryland and KB Home. With some potential bullishness, but not quite breaking out yet, like the Lennars or the Beazer. So there's still a lot of differentiation within the group. Is the group a strong buy right here? Not necessarily. But, as far as going back and revisiting Lennar, I don't see a great trade, setting up here, right now that I'd feel comfortable with. Okay. Let's see here. Then we have, we have Win. Okay. Win, which we got in here on the Vibe and the Trend Rider signal. Win has gone up into the 180, 185 area. It's kind of been pausing here for a little bit. Look, Win's significantly overbought. Okay, above 180, it's tough to be long Win without a consolidation or some sort of pullback. And, so as far as Win, I don't really see any real nice entry that I would feel comfortable with, either on a long or a short side here with Win. Really looks like it just needs a little bit of consolidation to come in there. Okay. LinkedIn. Okay, LinkedIn. And LinkedIn, we had this nice little bounce higher, broke the 50-day moving average, broke some of our November highs here with LinkedIn. Started to trade higher. This is the type of chart that in 2013 we've seen go set new highs. It didn't. It started to turn the other way, broke the 7. We're out, gone. And the stock just flushes after that. Goes down almost 10% from where we got out. Has had a nice little rebound here. I don't see a great trade set up just now. I think this thing needs to settle out just a little bit more overall for LinkedIn. You do have some of the analysts fighting about it and whatnot here with LinkedIn, but I just don't see anything that I'm really excited about. Tesla, kind of the same thing. I mean, Tesla, we had the run, we got the nice up day, we kind of came up, we started seeing some weakness come in around this 150 area. The day after we got out, Tesla decided to go up $5, but since then it's really taken a beating down, breaking down below the 7s. Tesla is one that if I'm going to get in, I really need a very exacting entry, like what we had found with it. And right now, trading below the 7, you can look at it from a bearish standpoint, but then you're talking about this real strong action, bullish action in December, coming back and retesting it. Are there buyers down here in the 140 area? To me, for my money, Tesla just kind of looks like it needs a little bit more of a consolidation, to really do anything, there. Okay, Halliburton, which I already referred to here. Halliburton, we got out as it broke 49 Friday ahead of the Fed. It just wasn't worth potentially being in something that was gonna keep us from making a new trade for 2 to 3 weeks. Okay, and that was the potential there. Halliburton started to rally back with the Fed. I mentioned to you that I went out and just bought some Hal calls. I showed you those in my account. But Halliburton pulled back a little yesterday. Got a jump here today. I sold out of it about 30 minutes ago. Sold out of the Halliburton calls with a little bit of a gain here. Can Halliburton go higher? Yeah. Can he go into the 52 and a half area? It sure can. But this bounce back up to about the 20-day moving average, which I'm not really showing on here right now. Happy to take it and kind of move on there. EMC. And EMC just had this beautiful bear trap here, where it shot up and then shot back lower here ahead of the Fed. The Fed action was really strong here for EMC, and EMC has just continued to just fly higher. Those of you that are still in EMC, this is not something that I would look to be getting out of completely at this point. Yeah, you want to maybe take some profit and go, somewhere else, sure, but this is the type of action in 2013 where we have just seen monster rallies continue, and to move up into the 25, 50, 26 area on EMC would not be a surprise overall. The whole activity with what the Fed did with tapering and seeing the market go up basically has kind of told the market we're safe to buy. And so your value players, those that want to come in and maybe buy something that's been a little bit weak and that has really good value to it, like EMC, the confidence to go out and purchase those has really come into play, and that bodes very well for EMC. Okay. Boeing, which we're in right now. Boeing here on a bull vibe move. Also today, triggering a trend rider as well, piercing that upper band. There's a little bit of news here on Boeing today. Nothing major. I mean, yesterday we basically had a contract canceled. Today, a contract happened. With Boeing, you're always going to have new contracts going back and forth. But from a technical standpoint, Boeing is still very strong, and we are looking for it to break above 140 and move into the 145 area. Now, I was asked about Boeing in regards to the options. Okay, so essentially, what I'm doing is I'm coming in here to cboe.com. Okay, I'm just coming up here to Tools and down to Options Calculator. Okay, Tools and Options Calculator, and whatever option calculator you want to use, they'll show the same thing. But I'm just putting in the ticker symbol Boeing. Okay, and we have the January 135 strike. Okay, they expired January 18th. The 135 strike, and the price that they fill in is basically the option price from yesterday. Okay, so yesterday at the close, the options were worth about $3.20, and we were dealing with about a 50-cent delta. Okay, what does a 50-cent delta mean? Well, it means that if the stock goes up or down by 50 cents, we'll probably lose, or excuse me, a stock goes up or down by $1, we'll either gain or lose 50 cents on our options. Okay, and that's kind of what this delta really is referring to. So today, what's Boeing at right here? Boeing's at 137.60. Okay, so let's put in the new price here, 137.60. Okay. 137.60. Our 320 option goes up to about 460. Okay, so it kind of goes up relative to what this delta has been, but notice now how the delta is increasing. Where when the stock was around 135, the delta was 50 cents. But now that the stock is going up, this delta is increasing. So for each dollar that delta goes up or down, we will have a greater move on our option. And this is the way we structured Boeing intentionally, so that it would be a relatively low delta on the entry in case we had some small pullbacks. They wouldn't be as painful as if we were dealing with a dollar delta, but where the delta would start to increase as Boeing goes up. Okay, let's take best case scenario. Let's say Boeing goes to 139. Okay, our delta now up to 70. Okay, Boeing moves up to 140. Our delta moves up to about 75. We will continue to see a rise in the delta as Boeing goes up, and when it gets to about 145, we'll be looking at somewhere around a 90-cent delta, and that's really where some of the gains will really start to pile on, is as we move above about the 139 mark here on Boeing, and start to get above that, the delta will be enough to really start to make that trade look really good. The downside to this is as we move higher and the delta goes up, a $1 move lower is just going to be a little bit more painful. Okay, and that's the product of a rising delta. Okay, we do have some theta in play, some time decay. We have about 2 cents. All right, for Boeing, 2 cents time decay is nothing. I mean, Boeing will move 25 cents in a matter of 2 minutes and offset anything possible in regards to theta and time decay. So there's no real time decay issue with this trade as we head into the holiday weeks here, where you're going to have the market only open for a half day and closed on Wednesday, and we're not having to really worry about the time decay in regards to this Boeing option. Okay. Alrighty, so those are kind of some of the past challenge trades. The one that we're in now here for Boeing, and no plans really to exit this over the weekend, as it's in a trend rider and a vibe bull situation. It's been consolidating here between about 130 and 137. We would expect about a $7.5, $8 breakout. That's where we get up into the 145 area. It could go higher. They do have a massive buyback in place and some phenomenal fundamentals. If Boeing kind of acts as many of the outperformers act at the end of the year, we are likely to see a real nice move back up here in Boeing. Okay. All right, let's take a look at some of the stocks you've put in. Cree, light bulb maker. Some bad news came out on Cree the other day. They basically talked about Cree and the price on their bulbs in stores has been dropping, and Cree has still gone up. Okay, and really, when you're dealing with a stock like Cree, it's not even as much technical as it is sentiment. And with Cree, you've been dealing with bad news, and Cree is starting to actually go up on good news. Okay, Cree is going up on good news, or excuse me, it's going up on bad news. That tells you there's buyers that are ready to jump in. Okay, and so I like this action on Cree. Cree can be very, very volatile and whatnot. Does it have major volumes? Not necessarily. Can we give some negative technical arguments? Sure. But fundamentally, there's some very interesting things to see this thing move up into the $62 to $64 mark here. Okay. Diamond Offshore. Okay. Diamond Offshore here, this has been one of the major underperformers within the energy group. They deal a little bit more with deep water drilling, and where most of the growth in the oil industry has been in the U.S. has been on land, and they're dealing with deep water, and so they've just been underperforming dramatically. Are they at a bounce point yet here? Well, whenever I'm looking at something in free fall, I really need to look at the fundamentals, okay, to say, hey, is this a place where people, may be willing to jump in, to potentially buy this? Is there any value here? I mean, we're looking at a forward PE of 10, earnings per share next year of projected around 18. $33 book value. Yeah, I mean, we're pretty cheap. This stock trading at 55 is pretty cheap. But just because the stock's cheap doesn't mean it's not going to go on clearance. And for Diamond, okay, for Diamond, what it's had happen here is it essentially has had this downward trend, whose trend has now steepened. Okay, what does that mean? Well, we talked earlier. Upward trends, they tend to steepen before dropping. Well, downward trends tend to do the same thing. They tend to steepen before popping. Is there enough here on Diamond to make me want to get in today? No, not at all. Not at all. I'd want to start to see this kind of go into some sort of process of basing out, where it's kind of setting higher highs and higher lows for a little bit before trying to buy in there on Diamond Offshore. Okay. Can you play it real short-term technical-wise? Come into an hourly, play a bounce off 55, play a move above 56? Sure. I mean, Diamond starts to break 56. It's probably going to bounce into the 57.5 area, but it's one where I'd rather be in and out short-term trading than buying it longer-term here. Costco. Yeah, earlier today, Carl talked about Costco, and Costco is very interesting. We're seeing a lot of strength come into the consumer staples here today. And here's kind of just the consumer staple sector by strength. I'm not talking about relative strength against the market today. I'm talking about strength relative to where they open today. Many of these consumer stocks opened weaker today. Okay, and now they're starting to kind of get some gains over the last 2 hours. Costco, while not a true consumer staple, is very much like that. One of the bullish things about Costco is that it's moving above Wednesday's high. That is very bullish for Costco. I mean, we saw stocks like Google, right? Where yesterday, once Google started to move above Wednesday's high, all right, Google was ready to go. Buyers were more comfortable stepping in. Google gets a nice boost here today. We saw the kind of the same thing with Amazon. Okay, so some of these consumer staples, they're just kind of lagging just a little bit. Costco included, but bullish from the fact that it's pushing above Wednesday's high. I would kind of use that point as a relatively tight stop overall. Okay, look, broad market. Okay, broad market, very bullish. Okay, in a very bullish position overall, jumping from the lower band to the upper band. Positive catalyst here for the market. How far can it go? I mean, this market, 20 points in this market isn't what 20 points was at the beginning of this year. The market's up 14 points here today, and it's only up 0.77. At the beginning of the year, a 14-point move was a lot bigger than what it is now because of how much more the market's worth. So to see this thing go up into the 1860, 1880 area would not be a big deal overall for the broader market as we kind of head into the end of the year. Okay. Is there going to be some profit taking? New Year's Eve day, sure. Absolutely. But for now, most things continue to be long. I want you to keep in mind that in a bull market environment, okay, if you're trading a basket of 5, 6, 7 different stocks, okay, it doesn't matter what your stock is doing relative to the market on a given day. Okay, it doesn't matter. I can't look at Boeing and say, well, Boeing is outperforming the market today, so that's fantastic for Boeing. I can't look at Chesapeake and say, well, Chesapeake is underperforming the market today, so that's bad for Chesapeake. Okay, a lot of times in bull markets, what you will have happen is you will have leadership shifts. So you'll have a sector kind of go flat one day and then tear it up the next day. While then the day after, that sector will shift. You'll start to see money go in maybe financials or maybe go into staples. You'll see this rotation effect. And so just because your stock underperforms the market that day or outperforms the market that day is much less significant in a bullish market than it is in a bearish market. Okay, that's why some people like myself argue it's easier to trade in a bearish market because basically market goes down, most stocks will go down. In a bullish market, it's not the case. You're going to get some that outperform, some that underperform, and then they'll take turns. Okay, they will just take turns as they go through. Some interesting setups out there here. KRE, very bullish setup here, breaking above 40 today. Notice KRE going up as interest rates are going down. Okay, we've talked about how the interest rate rise has been good for the KRE, and now we're seeing interest rates go down today and the KRE making a nice move forward. That just tells you the strength is still there in KRE and still very positive overall within these regional banks. Okay, as far as pushing higher. If you take a look at even something like the IYR, okay, I mean the IYR had a nice push higher on Wednesday, okay, fell yesterday as it was one of the weaker points in the market. Today a little bit of uptick, but IYR starts to break above 64, becomes a phenomenal buy, to the upside. The stocks that have kind of pulled back just a little bit off of some of Wednesday's gains, they're not necessarily bearish, but they're ones where, okay, you can start filling in or buying in around these levels or wait for them to break Wednesday's levels to go after them. Okay. Yeah, STX here, flying, right? I mean, this whole group has been really positive. STX, I am not aware of the news on STX today. Let me just go do a quick check. This isn't my streaming news, but was there an upgrade on it here today? No, this isn't showing anything. I imagine there was some sort of news on here. From a technical standpoint, there's nothing bearish here. Okay, there's nothing bearish. But at the same time, when I'm riding an upward trend and we get a big up day on big volume, I tend to get nervous. Okay, it can sometimes be exhaustive. So I wouldn't hold the whole thing into the weekend. I would pull some off and then look to ride the rest. But big up, big volume, that makes me a little bit nervous. Doesn't have to pull back, but more times than not, you'll see a short-term pullback there. Yeah, EMR. Oops, let me get this ticker in here correctly. Interesting stock. Emerson Electric triggered a nice trend rider bull yesterday. Has continued to go higher here. New 52-week high. One of the things that a popular saying in bull markets is buy high, sell higher. Because stocks that set new 52-week highs tend to continue to go up. That is the tendency. For a lot of traders, they look and go, oh, the stock's high, tough to buy. But stocks that hit new highs tend to keep going up, while stocks that hit new lows tend to keep going down. And so in this market, you're looking for an entry, something like Emerson, in a very positive move here. Okay. Now, is Emerson a little bit above the 7? Is this thing a little bit too far above the 7 for comfort? Emerson normally doesn't trade $2 above their 7-day moving average, right? I mean, just look at past history. The last couple times it's shifted $2 above the 7, it's had short-term pullbacks, okay? So, you kind of have to really kind of gauge your risk-reward here, but from a technical standpoint, continues to be extremely bullish there on EMR. Okay. Yeah, AIZ been consolidating nicely. Some big volume in this consolidation for AIZ. Triggering, pushing higher here today above 66. It's got everything you would want. Has it consolidated enough? You could argue that it hasn't. We've seen many of these charts this year. In fact, let's just go to FedEx. Okay, where they start to pierce the upper band after a very short consolidation. They decide to consolidate just a little bit more here, like with FedEx. And so AIZ, that's kind of your risk there. I don't think you have a huge downside risk. You're just risking it consolidating a little bit more. If AIZ were strong come Monday, pushing above 66.20 or something, I'd feel a little more comfortable that it's ready to move. But I'd rather buy a trend rider here for something like FedEx that's been consolidating for 2 months than to buy something that's really only been consolidating for 3 weeks. And we still have the bands contracting. Doesn't mean this can't go up. I mean, this can still absolutely go higher here on AIZ, but from a technical standpoint, something like FedEx would be much nicer here. Okay, FedEx above 140. I know Carl's talked about that, just in a very nice position. UPS kind of doing the same thing. Owens, Illinois, OI, which kind of broke out last week, has kind of continued to drift higher. OI normally doesn't make huge moves each and every day, but still in a very bullish position overall. Okay. TRLA, Trulia. This is one, it's been on a downturn. Big volume bounce higher, right? Big volume bounce. Coming back to this kind of broken support here around 34. This is something where if it were able to move up into the 36 area, I'd actually probably look to short it and short it down into the 31 area. I'd feel more comfortable with that than trying to be a buyer of it here. But that's just because of the overall nature of the trend. I'm sure there's a lot more fundamental movement with this than really technical movement, given the lack of volumes. The overall lightness on the volumes tells me with this stock that I really need to be paying attention to the news and to the fundamentals. And so I haven't, right. I mean, I don't follow it like I follow Boeing or Halliburton or some of these others. But from a technical standpoint, I'd rather short it at 36 than get long it here around 34. DuPont. Okay, DuPont. We talked about this one here. We talked about it, how it pushed back above the 7-day moving average. It's continued on its uptick here, post Fed, and nothing real bearish there. With DuPont, probably the biggest bearish argument you can make is that there's been morning selling on it for 3 days, well, 4 days in a row, about 4 days in a row now. DuPont has gone down in the morning, but then you can kind of flip that argument and say, well, it's gone up every afternoon. So which side of the fence do you want to take? Again, this is stock setting new high, continues to go to a new high. Stocks tend to continue to go up. Okay. Yeah, Mike. OII. Okay. Oceaneering here. This is an interesting company, and they broke. In fact, I'm going to zoom out here to a weekly chart on OII, and you can see overall they're still in a really nice upward trend. Okay, they're in a nice upward trend, but for the first time in 2013, we saw OI start to move into the lower Bollinger region on the weekly chart. Okay, it's still kind of trading below the 7 week, still with some weakness from a weekly standpoint. Okay, and given the volumes on this, I kind of want to pay attention a little bit to the weekly chart. So we're seeing some weakness still in the weekly chart. Yes, could it start to trade above 80 and turn that bullish? Absolutely. Okay, and that's where I'd kind of be looking. If we kind of now break this into a daily, we have action here that could be bullish or it could be bearish. I mean, we basically have this drop, this consolidation, and it could potentially have another drop in that. Kind of resolve itself like MRO has, where it had a drop, a consolidation, and then another drop. But if OII were to start to break above 80, not only would you have a trend rider bull, a vibe bull signal on the daily chart, but on the weekly chart, you would start breaking back into that upper Bollinger region. Okay, start breaking back in that upper Bollinger region and looking really nice there for Oceaneering. Yes, Slavic Chesapeake finally broke some consolidation. Yeah, I mean, look, this is kind of classic, bull market. Stock outperforms one day, goes flat the next day, and that's not necessarily bearish. In fact, in many cases, that's more bullish than anything. Up about 12 cents. It's got a beautiful hourly chart. Overall, it's kind of consolidated just a little bit here around 27.20, and very, very nice there. SanDisk. SanDisk here. This one's kind of been going up with. Let's see, Western Digital. Yeah, I mean Western Digital. Beautiful uptrend. SanDisk as well. Is this a breakout for SanDisk? Yeah, it is. Not a whole lot of volumes there. It makes me a little bit nervous, but overall, this is a very bullish consolidation pattern for SanDisk. Okay, this isn't a trade that I would get in, Max, and the reason I say that is just risk reward, right? I mean, SanDisk, it's $2.20 away from the 7 right here. Yeah, it's triggering some bull signals, but 220 from the 7, that means anything around 69, 68 and a half, it's still in a pretty bullish area, but I'm taking a big hit on SanDisk. If there's just a small consolidation, it's going to be pretty painful there for SanDisk. Yeah, you can argue that SanDisk following STX, all kind of moving. They've all kind of been taking turns. SanDisk really has kind of been the laggard in the group, but still very bullish. I mean, it wouldn't take very much to see this thing up at 75. The refining sector, Tesoro, Western Refining, okay? Tesoro continues to be in this consolidation mode, okay? Is this bullish? Yes, it's very bullish, but no signs that it's ready to move yet. Um, it, 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 Am I bullish on Tesoro? Would I love to play Tesoro? Absolutely. Am I secretly hoping Tesoro consolidates for another week while Boeing goes up into the 145 area, and then we can pop out of Boeing and start to mess around in Tesoro on its move to 65? Yeah. But so far, still continuing to consolidate. Western Refining has been the outperformer overall, and you see it kind of still fighting around 40 here. Do you think Western Refining starts to really break above 40? The probability of Tesoro breaking out and Valero breaking out grow. Okay, but for now, I mean, Valero tried to break out, contracting bands, pulling back a little. There's nothing bearish here. It's just, are they ready to really start to move higher? And it still looks just a little bit early. Okay, gas prices. Now, here's the UGA, the gas ETF. You'll notice gas prices here have been moving up strongly this week. They've had one of their best weeks for gas prices overall with the UGA. And that bodes well for the refiners, okay? They don't necessarily move in lockstep with the gas price, but, with the price of gas going up, price of oil has been going up as well, just slightly, but gas has been outperforming oil. A little bit of improvement in the crack spreads, and bodes very well for Tesoro. Look, if you're a long-term stock player, you're looking to build a position on Tesoro, hey, if I was in my fund manager days, I'd be nibbling some stock here, with plans to potentially buy around 55, knowing my worst-case scenario is probably a pullback back to about 50, 51 before a snapback, but also where, hey, this thing starts to break above 58.5, really strong overall there. Alrighty, well, so that's kind of some take on some of the things that are going on out there. Broader market remains very bullish. Remember, we were taking a look at things like the bullish percent index and talking about how, hey, it wouldn't take much to trigger a bear signal on this. And, you can argue that on Wednesday morning, the bullish percent index triggered a bear signal, but that's been reversed very quickly. And, all these indicators that were potentially threatening, and if we would have seen the market react negative on Wednesday, would have given a lot of bearish confirmations out there. They have not. They have not. They've started to reverse the other way. The bulls still have everything that they would want to see in this market to go higher. Okay. Volumes are going to start to lighten up next week. Okay, market will trade a half day on Tuesday. It will be closed on Wednesday. We will see some generally lighter volumes. Generally, this holiday season tends to be bullish. Okay, especially after a bullish year. And then you tend to see a little bit of sell-off the last day of the year. The 31st, so 2 Tuesdays from now. Tends to be a decent day trading day for some downside action. Historically, Google's been very nice to me on the last day of the year from a put standpoint. But as we head into that, we will look at those. JP Morgan. I mean, JP Morgan, this is kind of like the rest of the financials. Very bullish action on Wednesday. Extremely bullish action on Wednesday. And, everything since is just a continuation of that. Everything is just a continuation. Bank of America, okay, if we're lucky enough to get Bank of America down to 15.5, come Tuesday morning or something like that, it'd be hard not to buy some Bank of America. Okay, look, I mean, these stocks have had huge surges. To see them consolidate just a little bit wouldn't be a surprise. I mean, even back here in November with Bank of America, the big shot up, little consolidation before the big run. And so, we start to see that they could be very nice entries. Anybody in Bank of America, JP Morgan, I couldn't be saying, hey, get out. Goldman Sachs, same thing. Morgan Stanley's kind of been the laggard in the group. Overall, some big volume drop yesterday, but the banking sector, there's just nothing bearish here. There's just nothing bearish. Okay. Yeah, Martin, Starbucks. Starbucks, for me, is a little bit tough to want to play on the upside, just simply from a fundamental standpoint. They've had really good earnings this year. They've had good growth. They're valued nicely, but they're fairly valued. Okay, when you take a look at something like Boeing. And let me kind of come in here fundamentally. You take a look at something like Boeing, and you're dealing with a forward PE of about 17 and a growth rate of about 12. Well, for Boeing, this is really good, okay? And historically, these types of fundamentals have led to the stock going higher, and now they actually have a stock buyback going on, okay? With Starbucks, we're now taking a look at a forward PE of 24 and earnings next year of 20. Not bad, okay? Not bad, but they don't have as big a buyback in place. And for Starbucks, these numbers are stretched. Okay, these numbers are stretched to where I'd want to see some more earnings, I'd want to see some more growth, or a pullback back into the 70 area that would make these numbers from just a pure fundamental standpoint look really, really nice. Look, I'm bullish on Starbucks. Would I be surprised to see it go back above 80 by the end of the year? No. But fundamentally, do I think Starbucks pretty fairly valued here? Yeah. Okay. Yeah, Baidu. Baidu, look, it's had its pullback. The move on it here today is nice. Granted, you'd like a little bit more volume, but that fresh trigger above the 7, you got strength coming back into Sohu, strength coming back into Sina. In fact, Sina kind of above 80 come Monday morning would be very, very interesting. Kihu hasn't been able to really get back above 80 yet, but even Kihu's kind of trying to show some signs. For my money, I'd rather wait till Monday here within this to get into this group. But all 4 of these Chinese internet stocks have some really strong bullish potential here. Okay. What did you get into Chesapeake for? Let me go and double check here. Carl, if you're on chat, you mind putting that in the price there for Chesapeake. If he's not, when I get to my my other computer, I'll put that in here. It should be right around the price where it is right now, Wick. There shouldn't be much of a difference there. The current price here on Chesapeake, we're looking at what, $1.60. Okay, $1.60 overall. Oh, okay, the entry price here. Entry price $1.56. Okay, $1.56. Yeah, thanks, Carl. Thanks, Carl. Okay. Alrighty. Well, thanks for hopping on. Carl will be on shortly with his top 3. And again, into the close, Carl will talk about Chesapeake a little bit more, but chances are, no changes with Chesapeake and no changes here with Boeing. Heading into the weekend here for the challenge. And we'll kind of see where Boeing takes us here Monday, Tuesday. I would expect to hold it during that time. Also, again, I mentioned this yesterday, but for the holiday week, the 26th till the 31st, we are going to do a 5-part class on technical analysis, where we start from the beginnings of some of the theories and principles behind technical analysis, and start to really get into what some of the major technical components are and how they're being used. And really kind of get into some depth here with some of the technical analysis as the volumes lighten up, but we'll still be kind of trading around that as well. Thanks for hopping on, and we'll talk to you later. Take care.